Alright guys, hope you're all doing well. Still have the plague unfortunately, but wanted to do a quick video on higher time frame analysis and how you combine it with lower time frame analysis. So I'm going to use INJ as an example to start. We'll plot out two different ways to look at this, and the first thing I'm doing is I'm doing some higher time frame analysis. So all I'm doing is drawing out the order blocks on the 4-hour chart, right? And these are very general areas. If we look, right, 24.7, I mean, it's not that small, so it's not that big of an area, but it's not exactly that precise, right? If you put your stop, here, and then you enter there, it's a pretty wide area. So how do you combine this with, let's say, lower time frame analysis? Well, it's pretty straightforward. We're going to leave these boxes alone, and we're just going to look at the price action, right? So on a lower time frame basis, when I'm looking at all these taps of support, getting this exactly right is not going to be possible. But what can we do to kind of maximize, I guess, our likelihood of being correct? So first thing I'm going to say is catching something like this, probably impossible. I mean, the wick here is just so fast. I doubt you're going to be able to get this, and I wouldn't really chase it because, it's just going to trade back down again. But something like this is much easier to trade. So here's your first tap of support, right? We come back, and then look at this. We make a higher low, still in that 4-hour block. So what I would do here is I would enter the trade, right? And I just put my stop now, not a hard stop, a close below stop, here maybe, right? And then I can target all of these highs, keep a really nice RR ratio, but also have a stop that makes sense. And all I'm trying to do is identify this local change of structure, right? And we see this gives a great reaction, and we just continue grinding up higher. And we can really do this on any time frame. I mean, something like this you can enter off of as well. So what happened here? We swept all these wicks, but we had a very strong reaction and traded back inside demand. And if you guys look, we're not able to actually break down. So you could really just enter, anywhere on here is totally fine. And then you're just going to ride this, right, to whatever take profit you want. And you could keep longing this level over and over again. All I'm really looking for is this kind of lower time frame change of structure, right? We're starting to make higher highs and higher lows and higher highs, pretty much. Yeah, and then this is also quite different. This is from today. We can see, yeah, you can long here, but when you have this, right, this kind of failed breakout thing, demand is usually not going to hold after this attempt. So you had an attempt to trade back inside this range, right, up here, you failed, and then you just nuked right through demand. And now we're just kind of consolidating below. It's not a great look to me, but we'll see what happens. This is a no trade zone. And you can find these kind of setups really everywhere. Like something like this was my cue to enter, was my logic to enter Bitcoin the other day, where you had this and you came back down and you didn't break it through, right? And yeah, you could keep doing this over and over again, right? If you have this lower time frame reversal where you can't break structure, there's really nothing wrong. This is when you had a problem, right? When you had something like this, price couldn't actually trade above this level, and we just die. So yeah, that's how I would look at these kind of things. Again, something like this as well. So here's your wick. We can call this the initial wick. The price trades back down again, but we make a higher low. So low 1, low 2, and then now you've had a break in structure. You've taken out all of these highs up here. So I can write this out, but it should be pretty clear, right? So there's your range. You've flipped the range, and now you've just continued grinding higher. So this is kind of what I would do if I was looking for like a high time frame, low time frame combination. Because if you look at these lines, they're pretty clear on a 4-hour chart. So it's not hard to find these, right? It's just about marking these levels and then leaving orders. And then on a lower time frame, trying to actually spot if these levels of demand are going to hold, right? Because again, we can see that this level is significant just from, I'm going to delete all these guys, just from drawing across, right? We talked about taking the wicks, drawing across. If we just draw this across, I mean, it's pretty clear that this is some sort of support level. So by zooming into the lower time frames, we can kind of get a more, I guess, informed opinion here of what's going to happen. And again, when you have stuff like this, just run away. These long upside wicks, they just nuke. They pretty much do it every time. So something like that, something like that. And these are the opposite, where if you have something like this, and there's just not too much follow through, like you see there's really no momentum off this guy, it's just kind of wait and see. Like to me, this pump is just luck. There's really not much. There's nothing in the charts that suggests that this is going to happen. I guess you flip this level, but it's just not very strong. So I would look for strength. That's pretty much the easiest way to not lose, is you just bid things until they stop working, right? This is a bull market. People who tell you otherwise are just wrong. So keep assuming bull, because as long as you do that, doop, doop. Again, could not break structure. If we zoom into a lower time frame, it's going to look very similar, right? There's your low. You come all the way back, and you can't break this down. So this is what I would look for in order to pair higher time frame analysis with lower time frame analysis. I think this video is a bit winded, but yeah, I mean, this should be a good start. So hope you guys enjoyed, and I'll catch you in the next one.